Hey everybody, welcome to part three. This is part three of this market structure slash bias slash top-down analysis video. I was actually planning to focus on another asset, maybe gold or something, but we got an update of the trade that we spoke about recently, the Nasdaq trade. I'm sure if you watch the other videos, the previous market structure video, the one where I analyzed Nasdaq, you can check that one out. You can check it out. We spoke about the bias from the weekly time frame, stepping down to the daily, stepping down all the way where I said if we get a drop or a retracement, then or a manipulation, then we'll get an entry. And we did get the entry right here. Where's the here's the FTMO account. This is the FTMO account that we are monitoring, guys. If you have watched the previous videos, then you know that this is the FTMO account. The number is right there, 109802882, right? So this is the trade that we took yesterday. It was, what time frame did I enter it? I entered on the 5 minute. Was it the 5 minute? I don't even remember what time frame I entered, but let's check this out. No, I entered on the 5 minute. No, 3 minute. I entered on the 3 minute time frame, right? I don't remember, but I think it was a 3 minute time frame. Yeah, it was a 3 minute time frame. I got I entered somewhere up there, right? But I'm gonna show you guys the analysis. It's top-down analysis. I'm gonna first start with the Nasdaq. We're gonna analyze this trade. As you can see right now, the account is on 4%. There it is right there. Can you see it's written the FTMO accounts number, and then it's the swing. It's FTMO swing, or I wanted to open the FTMO account itself directly, but should we open it directly? Nah, let's not do that. The account right now is on 10,433, which means we made £100 from this trade, right? We made £100, which is we made 1.1 something percent, right? 1.1 something percent. We are now sitting at 4.3%. We're almost at the 5% mark, so maybe in January we might hit the 10% mark. I don't know, but we can't really predict how the market is going to behave in January, but it sure as hell is gonna behave way better than in December, right? So this is the trade right here. It says right there, buy one US 100 cash at 16,233, and then the exit. Then we sold it at the top right there at 16377. The profit was £115, right? So that was the trade itself. That's the trade. We're sitting at 4.3%. As I said, we're going to document this account, the growth, because I know most of your mentors are not going to do this, right? I want to show you guys that it's possible for you guys to do it as well, but it takes patience, bro. It really takes a lot of patience. So this is the FTMO challenge account. It really takes patience to grow these things, and it's the analysis that I'm showing you guys right here, guys. It's nothing complicated. And I need to analyze EU, right? Let's start with Nasdaq. I'll come back to EU, but in this video, I want us to check out gold. So stick around for that. We're gonna check out gold and try to analyze gold, because it is a good asset, but it's risky, bro. Gold is really risky. I don't like playing around with it. The reason why I'm saying it's risky, I don't like the risk to reward ratios when you're trading gold. I like assets that give me a really good risk to reward ratio. So assets like EU, Nasdaq, USD, and GBP USD. So this is the Nasdaq. Where is the trade? Oh, there's the entry right there. But let's quickly recap the analysis. We'll come back on the entry. We'll come back to the entry part. What the analysis basically is the previous video, guys. I'm sure you've watched it, right? I'm gonna quickly just run through it right now. I'm gonna quickly run through it from the top-down analysis itself, going all the way down to the entry, right? We started from here on the monthly time frame. We started from here. Oh, there's that level that we spoke about. It is headed towards that level. Wow, I really caught that analysis right there, bro. Really caught that one. So we analyzed that the structure is in a bullish structure. You can watch the previous video where you saw these previous three candles, the previous 3 months right here, and we saw this huge candle from last month. This huge candle engulfs these three candles. It's an engulfing candle. It's a momentum candle. The high of this candle is very close to the high of the candle is very close to the close of the candle, right? They're very close to each other. The high, the close, they're very close to each other, and it's a huge momentum candle. This body can cover the previous bodies, and basically it's coming off a psychological level as well, an investor key level or a support level, 14,500 right there. It bounced off that level, so we have a lot. It's telling us as well that there are sell limits here. There were buy limits, and there were also sell stops that were hunted right here. They hunted a lot of sell stops before pushing it up, but there were buyers who stepped in right there. Of course, it's the buyers who hunted the stop losses, right? Who hunted the stops right there. It pushed upwards. From the monthly time frame, we're looking bullish, and the nearest key level that we're looking at is the 16,500 level. I'm not sure if I'm gonna re-enter Nasdaq again, but we would really need to have a significant drop before I even consider touching it right now. Maybe we might not trade for the rest of December, but who knows. So the nearest key level is the 16,500 level. It's an investor psychological level, but it's also a strong previous key level from 2022, from December 2021, right? And then we step down on the weekly. On the weekly as well, we were bullish. The candlesticks as well were pointing that price is strongly pointing to the upside. Why do I say that? We're in a short-term sell trade right there. We broke the trend when we broke the previous lower high right here. We entered an uptrend. We rallied upwards. We retraced all the way to this 15,800 level. We tried to break it at first. We failed. The following week, we tried to break that level. It failed again. They were hunting a lot of sell stops right there. Probably hunting a lot of sell stops. Then buyers stepped into the market. You can see with the way this candle is built, right? It has a long wick at the bottom, or a long tail at the bottom, headed towards a key level, an investor psychological level, and then the body is all the way up there, right? This is sort of like a hammer candle. Sort of like a hammer. It's built like a hammer candle. It is a hammer candle in a way, if we're in a sell trade, but it's built like a hammer candle. I wouldn't say it's a hanging man candle. I wouldn't say that. Other people would think this type of candle means it's a sell setup, but this looks like a buy, because what this candle is telling me is that sellers try to push price down, but the moment they reached the 15,800 level, buyers said no, we are still in a bullish market. That's what this candle is telling me, because it pushed down, then it was pushed all the way back up. This candle is telling me that price is more likely to expand to the upside. That's what it was telling me, right? The probabilities are higher for price to expand to the upside, which is basically expanding all the way to the 16,500 level right there. On the weekly time frame, we were bullish, and then there was a trade that I missed on Nasdaq, bro. I was really heartbroken. It was because of the blackout. I think I spoke about it in the previous video. So at least I got redeemed, bro. I really got redeemed. You see why your mental state needs to be really solid. Shouldn't let these things get to your mind. So basically, you guys are seeing with how I also deal with the psychological aspect, missing trades, missing those huge. I missed this huge bull run right here. I missed the 1:4 trade. Yes, I only caught a 1:2 trade, but it was worth the wait. It was worth the wait. On the daily time frame, this candle as well was telling me we are in a bullish market, so I was waiting for a small retracement before entering. Monthly, weekly, daily, we were all strongly bullish. So what I did, sessions as well, guys, sessions 1 hour before the New York session opened, right before the New York bell rang. 1 hour before, I was sitting in front of my chart. I wasn't babysitting the chart, but I was already watching for entries. And my entry strategy, the entry strategy that I executed is the ICT concept, basically. It's the ICT concept. That's the best way I can say, right? It's not really accurately the way ICT teaches it, but it's the ICT concept according to my own way, right? So what actually happened in this market, as you can see, these are the things that I plotted. Actually, this is the trade. This is the trade. You guys can say I didn't put this right now. I put it yesterday before I placed the trade, because I needed to know where my stop loss is supposed to be. My stop loss was right around 50 points right there. It was right around 50 points. The trade is already, the market has gone 100 points. It's probably even gonna go even higher towards that level. But where was that entry? Oh, it was down here. Let me expand it. The reason why I took that trade, right? It's mostly based on experience. I think that's the best way I can put it, because I already know the behavior of Nasdaq, right? When the Nasdaq really drops during 4:30, when the market opens, if it really tanks in a specific direction, it is more likely to whipsaw all the way back upwards. I just know that's how Nasdaq behaves, right? With that sort of knowledge and knowing that we're in a buy market and they manipulated it all the way to the downside because they were hunting for sell stops, they hunted for sell stops, they hunted for sell stops. So what I was waiting for, the market was still up here. What I was waiting for, I was waiting for the algorithm to start pricing. Right? I was waiting for the algorithm to show me that okay, it really wants to push upwards. So what actually happened in this 3-minute time frame is they were hunting for stops and hunting for stops. I was waiting for the moment when I feel like they've stopped hunting for those stops, right? What I mean basically, price pushed up, right? It created an imbalance right there, a fair value gap. I'm going to teach this in the next video or the video about the entries, but if you watch the first 3 or 4 ICT course episodes, you will learn about fair value gaps or imbalances, right? It created an imbalance right there. As you can see, I mixed top-down analysis and also fair value gap entries basically. The power of three is sort of similar to the way I analyze my bias. It's sort of similar to it, but it's different. ICT does it in a different way. All right, so it created an imbalance right there. What basically a fair value gap? I can try and explain it, but I really won't explain it as good as the person who created it. That's why I'm saying some people should just watch the first 4 episodes of ICT's course to understand fair value gaps, imbalances. Yeah, the way when market structure shifts and creates an imbalance, it retests that imbalance and then it goes in that direction. You should go and learn those things. But anyway, what an imbalance basically is, we had a strong upward candle, we had a strong candle pushing to the upside, right? But when the next candle was priced, when the next candle was priced after the strong push upwards, the next candle didn't fill this gap right here, isn't it? There's a gap that is created when the market rallies upwards. It creates a gap. Price is supposed to come back and at least touch the candle before this candle right here, at least touch the previous candle's high and then go upwards. For example, what happened, where is a good example? Let's see. I'll find a good example. Oh, here's a good example right here. As you guys can see, this candle right here, right? There's this candle, then there's this strong push downwards, right? Then you see the next candle after that, it came back and priced, it touched this candle. It touched the low of this candle, right? The low of this candle, and then it pushed back down. That's basically usually how price is supposed to price, right? But what happened, it left a gap. This is a fair value gap, an imbalance in the market. Once it left that imbalance, I was waiting for price to at least reject and then maybe stop there. Then I was going to take the buy, but the train was moving way too fast. It rallied upwards. I saw it pushing with a lot of momentum, and then I immediately bought it before the candle closed. I bought it right there, right? I bought it right there on the 3-minute time frame, and my stop loss was quite wide, but it should have been tight. I should have placed it right there, just below the fair value gap. That's how ICT would have done it, but I prefer using a wide stop loss. I don't like using tight stop losses, right? And then I exit. As you can see, the trade was exited up where it is right now. I exited price where it is right now during the Asian session. It is the Asian session, right? 6 a.m. in South Africa. We're still in the Asian session because I know how how markets behave with each session, especially the Nasdaq, right? I know how they behave with each sessions. I know during the Asian session, it's usually not gonna make much movement. I know I can sleep and just close it in the morning. I just know that, right? And I have my stop loss in place because risk management is king. Don't forget that, right? As you can see, there's a trade right there, exactly the same way as you can see it right here. It's exactly the same reachings, but you know there are swaps and holding the trade overnight. There's this thing, what is it called? When you place a trade, is it commission? Forgot, right? As you can see, the trade was right there on the 3-minute time frame, right there. So that's the Nasdaq trade. The Nasdaq trade has taken us to 4.3%, which is a good buffer. We might take 1 or 2 losses, but even when we take those 2 losses, we won't drop that far before rebounding all the way up to 6, 7, 8%, right? So steady growth, as we said, when it comes to an account, we expect exponential growth like this. huge rallies, dips, a huge rally, a small dip, a huge rally. Right now I'm still going through these small dips, right? So I'm really being careful with the funds and not messing around too much with them. So that's the Nasdaq trade, right? And then let's check Euro USD. What's happening? I might as well just analyze it right now. I might as well just check it, just an update, because right now is the 13th of December. You guys can see the dates right there. Let's check Euro USD or the Euro dollar. Okay, let's see. So the first thing I do every time when analyzing, go to the daily time frame to see, do I have a bias now or we still don't have a direction? We're not in a rush. We're not in a rush. Let's see. What is the daily time frame say? I've really been blowing my processor out of the park, bro. Oh, I do have a strong bias right now. Do I want to trade against the trend? No, we are bullish, right? EU is bullish, right? What did the monthly time frame say? EU is bullish, if I'm not mistaken. It is bullish on the monthly time frame because of this momentum candle that we looked at last time. So the daily is aligning with the monthly right now. The daily is aligned with the monthly. Do I want to take the risk? Let's see. If it does give me a fair value gap on the 5-minute time frame today towards the London session, when it comes to Euro USD, it's the London session. So probably I'm gonna have to be in front of the chart at around 8:30 or 9:30 this side in South Africa. 1 hour or 2 hours before the London session really starts. So let's see. I think it's forming a downward structure for sure right now, like lower lows and lower highs. What is it doing? What is Nasdaq doing? Seems like there is something interesting happening on Nasdaq. Let's check the 4-hour time frame. I'm looking for a key level on the 4-hour time frame. I think there might be the nearest support level. The nearest support region is right here. Right? Is that the nearest support region? I think so. Let's see. Horizontal ray. The nearest support region is over there. Somewhere right there. I doubt this thing is gonna go that far. If it doesn't go that far, then we're gonna leave the trade, we won't take it. I think I prefer it going that far. It should come back to this previous zone of sensitivity. There's a lot of sensitivity happening in this level, a lot of noise happening there. So hopefully during the London session, it's first gonna give us a nice drop towards those regions. If it does go to those regions, then on the 5-minute time frame, I'm gonna look for an imbalance to be formed on the 5-minute time frame or a fair value gap, and it to break a previous lower high. I think I'm gonna explain this during the entries. It has to break a previous lower high, like on the 5-minute time frame, create an imbalance as well at the same time, retest that imbalance. Then that's where you get your entry, a low risk entry. As you can see with the Nasdaq trade, Nasdaq usually we have to use a 70 pip, 80 to 100 pip stop loss, but I was able to use a 50 pip stop loss because of the 3-minute time frame and using fair value gap entries. But we'll see if it comes back. So why are we having so many trades in December, bro? I'm not expecting December to move like this. Way too many trades, because I missed one trade on Nasdaq. Then there was a second trade yesterday that we caught, and already EU is showing signs that we might get a trade as well. So that is quite fascinating. What's happening with gold? I'm not gonna trade it. I'm telling myself I'm not gonna trade it. I'm just gonna analyze it for people who love gold. I'm not gonna trade gold. Need to keep my psychology in place. I'm focusing on only 2 assets, EU and Nasdaq, because US30 is in regions that I don't like. It's way too high, or some people say it's overbought. It's way too high. I'm not interested in something that is that high. Way too high. I'm not interested in that. The risk to reward ratio is not good enough for me to touch US30 right now. So let's see, where is gold? I really don't like this thing, bro. I really do not like gold. Gold is just not my cup of tea, bro. Good asset, but not my cup of tea. It's a sell. So gold is gonna continue tanking. From what it's saying, it seems like it's gonna continue tanking, but it's at a zone that is quite a lot of sensitivity, right? But it's probably gonna get enough strength to break this level. It's probably. It seems like because the way this candle, the previous day's candle is built, and the day before that, really shows that gold has some really strong sell momentum going to it. But we'll see if it's gonna break and continue downwards. But I'm not really interested in gold. I'm not interested in it, but I can tell from the weekly time frame it will be a sell, because this is sell momentum, right? Oh, gold was quite high. Gold was quite high. So gold is really a solid sell setup, right? Really is, but we are still in a long-term bull market because we pushed up, we retraced, we pushed up. So we need to really be cautious with this region first, and then this downward region right here. We need to be very cautious of those ones because price can rebound from those points. But from what I'm seeing, it seems like there's a short-term sell at the moment with gold. So we have to watch that really closely. Let's see. The XAU USD spot gold US dollar. I'm really too lazy to even analyze gold, bro. Gold is just doesn't pique my interest. You can see gold is really reacting off that level. That zone that I was speaking about, there's a lot of sensitivity and noise happening there. As you can see, even on the 1 hour time frame, there's some noise there. But the way structure is building, gold is building momentum because there's a low high, a lower high, lower high region, lower high here. If it continues like that and really gets the momentum to break there, then you might get opportunities to sell it all the way down here, right? From there to there, there to there. Basically day trades, right? You might get your day trading opportunities from there to there. But I'm not interested in gold, but I'm not gonna trade it. You guys can see, I just wanted to show you guys that the same concepts the same concepts that we use on those other assets, those same concepts also apply on gold as well, right? Top down analysis. Basically, you get your bias from a higher time frame. It doesn't matter which time frame it is. I'm using the daily because I love the I love the scope of the daily, right? Because it's speaking about an entire day to entire days to come, right? It has a huge range or a huge view. It is a bird's eye view, right? That's why I love the daily, right? If not the daily, I use the weekly, right? I love the bird's eye view those kind of time frames have. When I'm trading on those 5 minute time frames, even the 1 hour, my old way of entering trades, even on the 1 hour time frame, 15 minute time frame, my bias will always be based off the daily, and then I'll wait patiently for price to create structure on the lower time frames, the 4 hour, the 1 hour, 15 minute, 5 minute. Then that's where we'll catch your entries, right? This strategy has been used for years, guys. It has been used. Traders have been doing top-down analysis for a long time. Even ICT is using top-down analysis, bro. Because if he's getting his bias from a higher time frame, and then stepping down to the lower time frames, that's top-down analysis. I believe not every technical trader, most technical traders are supposed to have that in their arsenal, right? You should be able to look at higher time frames and step down to lower time frames as well. Use the 4 hour for your bias if you want to, then step down to the 5 minute for your entries, or 15 minute, or whatever it is. So anyway, that's gold. Let's check US30. Excuse me. Can't believe I have a cold and I'm still really recording these videos, bro. Because I know, like, the way my brain works, I'll become too lazy to record these videos. So, no, man, what am I writing? And the sad part is that I really didn't pay for TradingView this month, bro. I decided not to pay for it. I stopped 2 months ago. 2 months ago, I was like, I don't need. The reason why I paid for TradingView, I was using the replay function. Yeah, I wanted the replay function and I wanted more candlesticks from the past, but I ended up stopping. I was like, nah, 8cap interests me. That broker really interests me. Seems like it's a broker that I might have to use in the future. Quite fascinating. Let's open US30. 8 cap. I know I should be playing Football Manager right now, but I decided let me record these videos because I want to really offload these videos this December. Have all of you guys ready for January. Start January flying. Like with me, I'm gonna start January flying, bro. I'm gonna start January flying. That's 8 cap. I'm quite intrigued by this broker. I heard Rydell speaking about 8 caps. I was like, I've also seen it on FTMO. So I was like, since FTMO has used this broker, they use this broker, so let me check it out. US30. Oh, my network is spazzing. So US30 also pushed upwards, but the push was quite weak, bro. The push was quite weak, but what happened to US30 anyway? You know, in most cases, what happens on Nasdaq will probably happen in US30. Seems like US30 is also still a bull market. There might be a trade on US30 today, but I'm not interested. There might be a trade. Looking at it from the daily, then going to the 1 hour time frame. The way the 1 hour time frame, the way Asia is building from the 1 hour time frame, and if London continues to push it down further and create these previous structure like this, create a new lower high, there might be an entry for all you guys who love US30. So it's quite fascinating. Let's go back to the daily whilst we wait for this 8 cap thing to load. I can't believe I'm opening 8 cap whilst I'm still analyzing. I'm just intrigued. It caught my eye, so I thought let me just check it out. Market structure. What else can we talk about? Market structure. I don't use trend lines. I don't use indicators. I believe things like trend lines are redundant, bro. Why are you still using those weird things? Trend lines. I did like moving averages years ago, but it's redundant as well, right? But the thing that really delayed me personally in my journey as a trader that I can speak about is the psychology part, bro. The psychology part really screwed up my progress as a journey. I spent my progress as a trader. I spent a lot of years going in sideways motion because I didn't get the psychology part down packed. If you guys can really focus heavily on your psychology and risk management as well, you will really shorten how quickly you succeed in your journey, especially the psychology part. You must have a strong mental, or your mental has to be strong. You must be willing to take those losses like a champ, take those losses like a man. You must know how to minimize losses, right? You can't be risking more than 5% of your capital in trading, bro. Even 5% is a lot. With me already, I'm risking like 0.5% when it comes to funded accounts like FTMO. And the reason why I decided to take the prop firm route is because I'm not saying you guys should do the same. No, you shouldn't. Get yourself funds that are enough and a broker that allows you to risk low percentages on things like Nasdaq, US30, EU as well, right? If it allows you to risk low on EU, then stick to trading EU and GU only, and risk only less than 3% of your capital, right? Already 3% is a lot, right? Risk less than 3% of your capital, but you will grow slow, bro. Your growth will be really slow, right? Unless if you wanna gamble, right? Because everything else is just gambling. The risk is way too big, right? But that slow growth will be worth it, right? Some of us who want fast growth decided let's just go to prop firms, right? And it's easier for me because I get to document everything for you guys, and we'll do something that your mentors haven't been doing. Because it seems like when I tell them to do it and when I criticize them, I'm speaking out of my air, right? I don't know what I'm talking about. Apparently, we're not educated about trading according to DJ Coach. We're not educated about trading. We don't know it. We're just talking things that we don't know. So I thought, well, let me document everything. Leave the strategy in front of you guys for you guys to see it with your own eyes, and for you guys to see the results like this with your own two eyes, right? See the account grow with your own two eyes. I showed you guys on the risk management video, this account had a lot of losses when I was training the ICT, when I was trying to integrate the ICT concepts into my strategy. There were a lot of losses, way more losses than winning trades, way more. But the losses were contained and controlled to only 0.5% and below 0.5%. That's why the account was able to crawl from minus 3%, minus 3 point something, 3.4, 3.3, I don't know, minus 3 point something percent. Now it's all the way at 4%. Crawled all the way back up, 7% to 8% gain. 7% for sure to 8% gain, right? Why? Because immediately once I integrated the ICT concepts, I shifted. I was like, okay, here's the system I want to use, because I wanted to enter trades at lower time frames but based on high time frame bias. I wanted to take those trades from 3-minute time frame with a lower risk, right? With a tighter stop loss. It's wide, but it's tighter than if I'm entering on the 1-hour time frame, right? I wanted that. That's what I wanted. I wasn't happy with the way I was entering trades, even though I was profitable, right? I wasn't happy with that. So I integrated the fair value gaps and those sort of stuff, and that sort of stuff. I integrated it into my system. And then once I did that, I was like, okay, now let's start growing this account and documenting the growth of this account, this specific account, the £10,000 account from FTMO. Let's document it, each and every step. Every step, we'll document everything from the growth process. I showed you guys all the losses, and mind you, the losses are huge, bro. The losses are quite huge, right? So I was gonna open the FTMO account right now, but I can't because my credentials will be visible, so I can't do that, and I'm too lazy to go to my computer and start editing and stuff. But anyway, so 8 cap trading view, so you can enter trades on trading view. It's interesting. 4.4. I really don't care about reviews, bro. Honestly, I don't like that shit. Sometimes some of these companies buy reviews, bro. So I really don't care about that. I only care about reputation, bro. I want brokers that are the biggest and the most reputable ones. And it seems like 8 cap is one of them. I think XM is XNS, I'm not sure, maybe. XNS, IC markets. I don't know. XNS, 8 cap, I think even XM, but I don't like their deposit bonus stuff, bro. Things like that, and having high leverage. I don't like brokers that have high leverage. How much leverage does this broker give you? I don't like high leverage. Anything beyond 1:200 is not for me, bro. I don't like brokers that offer you high leverage, because the more leverage you are using, the more you are likely to lose trades. Is it regulated in Australia? Those are the ones that I really trust, bro. If there is an Australian regulation, 8 cap authorized, regulated in the Financial Service Conduct. In 8 cap Group Ltd is a company registered in England and Wales with registration number 1244831. So that's the first regulation in Wales. Oh, there's the Australian regulation there. Yeah, they're solid. Regulated in Australia, Bahamas, in England. They have two very strong regulations. Australia and England, very strong regulations right there. I don't trust the Seychelles and the Bahamas, and even Cyprus. I really don't trust the Cyprus regulations. So once I see Australia and England, I trust those two regulations. So seems like this is a broker that I must consider when I'm moving money from prop firms to brokers, because you can't just focus on trading prop firms or just trading brokers. You need to have money in the bank, money on brokers, money on prop firms, money everywhere, money on real estate. Like, you must have money everywhere, bro. Like, you can't have your resources in one place. But anyway, I'm not encouraging you guys to trade live funds. You can trade on a demo or something, because next thing here will be told we are encouraging people to go and trade live funds and start losing their money. I don't want that. So anyway, this is the Dow Jones, and 8 cap is interesting. I should actually save that, because I'm probably gonna forget it. 8 cap, save that. So I wanted to open the FTMO account, but where is the trading history? You know, like on MT5, I don't even know how to open the thingy. How do you open the history? Wow. I don't know how to open the thing. I don't know what do you call the thing that is the trade, the history of trades and stuff like that. I don't know how to open it. I really don't, guys. I've been trying to open the thing for months now. I really don't know how to open it. Is it the navigator window? The navigator window is already open. Market watch, toolbox. What's the toolbox? I really don't know how to open this thing. Oh, it's the toolbox. That's the name. Where is this thing? So we're 4.3% trade. No, I'm supposed to go to history, right? What are those old trades? Where are they? TP profit, where is it? What are the old ones? Let's go. Minus 50, minus 17. No, I want the old ones. Minus 40, minus 50, minus 20, minus 20, minus 20, minus 39, minus 40. This one is not clear. This one is not as visible as if I open it from my trading view thingy. Minus 48, minus 40, minus 32, minus 40, minus 49, minus 36, minus 47, minus 41, minus 50. This is a time when I was this is the times when I was really experimenting the ICT concepts, right? But besides even experimenting, my whole point right now is, even if you were to take losses in trading, even if you were to have a losing streak, right, it's painful. I'm not gonna speak like I'm a guru and now I'm used to losing streaks. I'm now used to, there's a reason why I focus on trading two things, right? Because I don't want to lose 5 trades in a row. I really want to cut down on losses and risking. I really cut down as much as possible, right? But my point is, if you were to lose 3 trades in a row, it's painful, guys. It's not nice. I'm not gonna lie to you guys here and say, hey, it's nice. Hey, I'm a guru. No, it's painful. Yesterday I was just beating myself up just for missing a trade. Imagine losses, bro. Imagine taking 3 losses in a row. I can't even sit and watch the market price, bro. With me personally, I can't sit and watch it. I place the trade, place my stop loss, and I go. I leave it. Sometimes I place a TP, sometimes I don't. I just go. But stop loss to me is non-negotiable. As you can see, as you saw right there with the losses are contained. I always contain my losses. Lose small, win big, right? So I'm not gonna sit here and say I'm a guru, I'm used to losses. Even if you were to lose 3 trades in a row, you will feel pain, right? But imagine the pain of losing those 3 trades, but losing massive amounts. Imagine instead of losing 0.5%, you are actually out here losing 2%. You lose another 2%, you lose 1%. Already you are down 5%. That is crazy. That is crazy, bro. You're already down 5% just like that. In order for you to recover, you already have to drop your risk to 1% or 0.5%. But it has already messed with your psyche. Because when you're taking the next trade, you're like, okay, I'm 5% down. If I lose the next trade, I'm 6% down. Right? You're edging closer and closer to that 10%, to that minus 10%, bro. This is why I say every trade you take, it's a test of your psychological strength, bro. Every single trade you take can shift your psychology to the worst possible way or to the best possible way. Every single trade you take, it's gonna do that. And I'm speaking personally from my experience, and I'm also speaking to myself, honestly, because I'm not a guru, right? I'm speaking to myself as well. So the thing that I mostly focus on is maintaining my psychology. The best that I can do to maintain my psychology is don't get overexcited with the winning trades. You can get excited, but move on from it, right? Don't let it get into your being. You become overconfident, you increase your risk and stuff like that. No, you can become excited, but move on from it. Don't get over it. Like, okay, now it's time for the next one, right? It's time for us to see, is the next one gonna give us even more, or are we gonna take a loss in the next one, right? So trading is quite a mystery, bro. This thing is quite a mystery. So that's that for this part. So is there any other asset that we like? Let's check GU actually. Let's check GU. I haven't analyzed GBP USD in front of you guys. Maybe it's because I've been analyzing EU instead. I haven't checked the pound sterling. Let's check the cable. They call it the cable. The GBP USD. Let's see, it probably has the same bias as EU, but it's probably moving as in a different way in the lower time frames. It has its own bias. So GU is a little undecided on whether it wants to go up or go down, right? It's a little undecided, which is good. Which is good though. So maybe GU wants to go all the way to this 1.25 thousand level right there. 1.25 thousand level. Maybe it wants to go there. Maybe. That's a big maybe because it can still push up and give you a bullish candle and then head towards the highs. But maybe it wants to go there before thinking of going up. But we'll see what GU actually wants to do. So GU right now for me, it's a no-go area. Why? How have I decided it's a no-go area? I opened the daily time frame and I'm looking for candles. I'm looking for structure. I can see structure. I can see a bias, but I can see that the trend changed up there, and I can see the candlesticks are not telling me that sell. They're not telling me buy. So I'm like, not interested. See you next time, right? So that's GU right there. No-go area for now. EU is the one that is a potential of having a buy. Potential of having a buy, right? But as I said before, we are closely monitoring it. We're not just gonna jump into it. Closely monitoring it. But anyway, that's EU. And as for Nasdaq, if it really drops hard, then maybe we might get another buy. But I think I'm fully satisfied with Nasdaq for this week or even the coming week. But anyway, that's it for GBP USD and everything else. This is the market structure part 3 video, and I think I've made way enough videos for you guys about market structure and bias. I think I've made more than enough videos for that. So that's it for this video. Stay tuned for the next episode.